Here is a review you were expecting. Number 5, we have Lending Club. Our score, 8.7 over 10. So when you think about Lending Club, we think about a lender that is best for online experience. They have excellent online experience. If you have bad credit, they'll take care of you. They can actually go all the way to 500. And we love the fact that their APR is kind of decent too. The APR oscillates from 8.30% to 36%. The loan amount here, you are looking at $10,000 to, actually $1,000 to 40 grand. And so when you think about Lending Club, actually they're not a traditional lender. They are a peer-to-peer or marketplace lender, and they were founded about 15 years ago. And what we love about Lending Club is that over the years they have actually revamped their platform, and today they are the largest online lending platform for personal loans. Okay, and they have actually funded billions in loans in the last 15 years. Fantastic. We also love the fact that they'll take care of you no matter your geography, no matter the state you are applying from. This is really good. The only exception is that they do not actually lend in Iowa and the U.S. territories. Okay, so that's kind of the little bummer here, but overall they're pretty good. And so let me talk to you about the pros and cons of a Lending Club here. So the pros, they will pay. So if you're talking about a balance transfer loan, they will directly pay off third-party creditors. Okay, and they accept co-applicants, and they are available to borrowers with fair to bad credit, even good credit. They take everybody across the FICO spectrum. What about the cons? They do have origination and late fees. They do have limited loan term availability, and they have a high APR range in some cases. So one thing I want to say here is that when we talk about Lending Club, one thing when we have done research about them for the last 10 years, they have really are good in terms of customer service. For example, they are good. You can use their loans for a variety of purposes, including debt and credit card consolidation, home repairs, medical bills, and special events. Okay, and what we love is that they will actually work with you if you want to co-sign or you want to co-borrow on the loan. Not a problem. So Lending Club, number 5, our score, 8.7 over 10. Number 4, we have Lending Point. Our score, 9 over 10. By the way, welcome back to the show. Really appreciate having you here. We are having a conversation about soft pull loans, bad credit, low documentation. And when we think about Lending Point, we love the fact that they are very great for fast funding. And even if you have bad credit, not a problem. They'll take care of you. And minimum credit score goes from 450 to 600. That's the minimum. And their APR range 7.99% to 35.99%. If you have autopay, if you set up autopay, they have actually discounts for you. In terms of loan amounts that they actually approve, you are looking at $2,000 to $36,500. Okay, and so Lending Point is actually available in 48 states and DC. So they're not in Nevada and West Virginia. I think they have some kind of regulatory problems there with the banking laws, so they're not there yet. You have to understand, when we talk about banking in the states, banking actually is done at the state level. Okay, so Lending Point actually is kind of cool. What we love here is that let me just quickly walk you through the pros and cons here, so you have a clear understanding. So pros, you have quick funding, so they will take care of you real fast. 24 hours is a norm for them. And low credit score requirements, no prepayment penalty. Okay, so what about the cons? Well, they do have origination fees that oscillates from 0 to 7%. Co-signers or joint loans are not permitted. And as I said before, they're not available in Nevada and West Virginia. So to qualify for a Lending Point personal loans, you must have a minimum credit score that goes from 450 in some cases to 600, because this depends on the state you're applying from. Okay, and one thing you need to understand here is that repayment terms range from 24 to 60 months or 2 to 5 years. Their documentation requirements are pretty low. They're not trying to ask you questions. They're not asking you too many questions. Okay, so that's really that's really great. And one thing I want to say here is that once you are approved, you could receive your funds as soon as the next business day. So this is really good. We love that a lot. They're really fast. They take care of you really, really fast. Fantastic. Number 3, we have here Avant. Our score, 9.4 over 10. I want to quickly remind you of today's topic. We're having a conversation about soft pull loans, bad credit, low documentation. And when you think about Avant, what we love about Avant is that they provide a smorgasbord, a variety of repayment options. This is kind of cool. Sometimes when you have a lender that allows you to repay, that's very flexible with repayment, this is really good. And the documentation, the paperwork requirements for Avant are really kind of flexible too. So that we really love that a lot. And in terms of minimum credit score, they actually go from 500 to 580, depending on the state you're applying from. And their APR ranges from 9.95% to 35.99%. Loan amounts you are looking at $2,000 to $35,000. And so Avant has been in the business for 10 years now, and they've been kicking ass like crazy. We love the fact that the platform is fantastic. Okay, their customer service, fantastic. They will actually give you the cash real quick. This is really good. And so let me kind of give you the pros and cons here so you have a clearer idea of who we are talking about. So pros: secured and unsecured loan options are available. Low credit score requirements, so 500 to 580. Loan terms available up to 60 months. That's kind of cool. Okay, this is really good. And what about the cons? They do charge an upfront admin fee. They have a high starting APR for prime borrowers. So if you are like if your FICO score is like 400, 450, 500, if they accept you, they will give you a high APR. And listen, that makes sense, because they have to account for the risk that you actually represent as a bad credit score, as a bad credit borrower, right? And for Avant, co-signers and co-applicants are not allowed. Okay, so overall, one thing I want to say here is that when we talk about eligibility for Avant, they actually they provide credit services to a range of customers. They're trying to take care of everybody. As I said, obviously, if you have a low FICO score, they will bump up the APR to offset. So, but you can use the cash for a lot of stuff: medical expenses, auto repairs, home improvements, travel, wedding, and so on and so forth. Number 2, we have here Upstart. Our score, 9.6 over 10. So one thing we love about Upstart is that not only are they asking you very low documentation, they are also very quick when it comes to releasing the funds. Not only they will approve you real fast, but they'll also release the funds real quick. We love that a lot. We love that celerity, that speed. Fantastic. Okay. Minimum credit score, 500 to 600, depending on the state you're applying from. And the APR range here, we are talking about 650 to 35.99%. And loan amounts, Upstart is very generous here, because they will approve you from 1,000 to 50 grand. This is really good. So one thing you have to understand with Upstart is that, and this is something that really differentiates, sort of sets them apart from the competition, is that they use AI, artificial intelligence, and machine learning based approach. They use a machine learning based technology rather to sort of filter, or I would say to evaluate borrowers, applicants. So we love that a lot. We love that a lot. You know why? Because you could be broke and have a high FICO score, or you can actually have a bad FICO score, but just banking, making a lot of cash. So, or you can be a doctor who just had bankruptcy, and because you don't have money, you can't get a loan. But if you go through Upstart, they will use artificial intelligence and machine learning to see that, hey, listen, with the fact that you have a degree, you have a medical degree that is still active, your potential to make money is kind of high. Even if right now you're just broke, you have good potential. So we love Upstart for that. Okay. Let me give you the pros and cons for Upstart. So pros, the Upstart is really accessible to borrowers with a fair or bad credit. They offer pre-qual with a soft credit check, and they have the ability to choose a custom payment date. They give you that option. What about the cons? They do charge an origination fee of up to 8% of the loan amount. They don't have secured or co-signer option, and loans are only available for 3 or 5 years. So overall, one thing I want to say, when we talk about eligibility, you have more chances of qualifying for a loan through Upstart because of their AI-based platform that considers a range of non-conventional variables when evaluating borrower applications. Okay, so this is really good. We love that a lot. Fantastic. Number one, the best of the best in our view. When we talk about soft pull loans, bad credit, low documentation, number one, we have Upgrade. Our score, 9.9 over 10. Upgrade is really great. And the thing here is that their minimum credit score goes from 475 to 560, depending on the states you're applying from. And their APR ranges from 7.96% to 35.99%, okay? In terms of loan amount, you are looking at $1,000 to $35,000. Now, Upgrade may seem a little less generous than Upstart, but their approval odds are higher, okay? And so they actually provide, and the good thing is that Upgrade actually, they actually are not only a lender, but they also provide mobile credit and banking services in every state except Iowa, Vermont, and West Virginia. So basically, you have a chance actually to think of Upgrade as a mini bank. Okay, they're like, yeah, they're not really a bank, but they're not really also a lender. They're just a combo of those two things. But we love their business model, and what we love here is that they are able to streamline the lending process with a mobile app that lets borrowers view their balance, make payments, and upgrade and updates personal information. And we also love the fact that they have a credit health tool that makes it very easy for you to track your credit score over the life of the loan. So this is kind of cool in terms of not only seeing where you started from, but where you are currently at and how much of the road, of the journey, you still have to take. So this is really good. What about the pros and cons here? The pros, you have low minimum credit score requirements. Borrowers can use loans to cover business expenses. This is kind of cool. And they do offer direct lender payoff or debt consolidation loan. So this is kind of good. What about the cons? They have a high APR range. They do charge fees for origination, late payment, and insufficient funds. And they only offer 2 loan repayment periods. But overall, when we talk about eligibility for Upgrade, if you're a prospective borrower, you have a chance to actually qualify because of their credit score. The credit score minimum are very low. They're very low. 475 or 460 to 560, depending on the state you're applying from. This is really good. And one thing I also want to say here is that you have to understand they're also very flexible in terms of how much you should be making, how much income you should be making to qualify. That really will depend on the loan amount that you need anyway. I want to, if you have met us so far, I really appreciate it. And to sort of thank you for your fidelity, if you will. I just want to share with you, I want to give you a bonus. And that bonus is OneMain Financial. It's another lender that does a lot of good things. And in our view, our score for OneMain Financial is 8.1 over 10. And OneMain is really great for when it comes to online lending with physical locations. So here you have a hybrid institution, sort of. So you have an institution that it has is like a brick and mortar bank, but also very visible on the internet. In terms of credit score, they'll take care of you if you have a bad credit, not a problem. And their APR goes from 18 to 36%. The loan amount goes from $1,500 to $20,000. The term length, you're looking at 2 to 5 years. And they want you to have to make at least $7,200 a year to qualify for their loan. Okay, so but it's a great candidate. We love OneMain. Let me just share with you the pros and cons of this lender, so you have a clear idea what we're speaking about. So the pros: you have secured options available, over 1,500 branches, offices for those who preferred in-person service. You have a variety of loan term length options ranging from 2 to 5 years. What about the cons? Well, you have origination fees that vary by state, high minimum APR of 18%. Because think about it, the minimum already is like 18%. There are people whose maximum APR is 18%. Okay, so business purposes are not allowed for OneMain Financial loans. So overall, when we talk about eligibility, well, we think that OneMain Financial has a good impact on bad credit borrowers. In other words, they are able to get a loan through OneMain Financial. This is really good. So OneMain Financial is really great. The only thing is, please keep in mind, they do charge a constellation of fees. So they have an origination fee of $25 to $500, or 1 to 10%. They have a late payment fee of $5 to $30, or 1.5% to 15% of the monthly payment or delinquent portion, as well as insufficient funds fee of $10 to $50. So you do have, a mishmash of fees. Please be very careful about OneMain Financial. I mean, they're good, but once you get the cash from them, make sure you repay on time. I just want to quickly have an overall conversation about soft pull loans, bad credit, low documentation. The thing is that when you actually think about your credit score, first of all, make sure that you check your credit score, because you could be thinking, hey, listen, I think I have bad credit, but in reality, you have average credit. Maybe you have fair credit, but you're thinking you have bad credit. You're thinking you're around 569 or 570, but in reality, you are around 625. So it's really important to actually always double check your credit score to make sure that you are on the right path. And when we talk about soft pull loans, make sure that you actually double check to make sure to just be sure that it is indeed a pre-qualification loan. Normally, the lender has to let you know whether or not they are going to do a hard pull before they do a hard pull. So if you don't get a notice from the lender that you are going to do a hard pull, then it's not a hard pull. Because if they go ahead and do it, and you see a little one on your credit report, a reduction of points like 10 points or 15 points because that lender went ahead without your authorization and checked your credit report, then that hard pull will be reversed. So always make sure that you have a notice that says this is a pre-qualification soft pull only. Okay, this is important. Now, when we talk about a bad credit score per se, there are 5 elements that make up your credit score. And it's important that we really remind everybody so we are on the same page. So at least you have a clear idea of things you have to do to actually beef up your credit score. So your payment history accounts for 35%. The amounts you owe accounts for 30%. The length of your credit history accounts for 15%. New credit accounts for 10%. And the credit mix accounts for 10%. Okay, so if your finances fall short in one or more of these areas, what will happen here is that your score will drop. And so if your score drops, of course, you're going to start seeing yourself in the FICO score basement, and this is not definitely a place you want to be at. Okay, and one thing I also want to say here is that you have to constantly monitor your credit score to make sure it is accurate, but also to make sure it is going up. Let me give you a few pro tips before I close to this conversation. One thing I want to say here is that when we talk about the types of bad credit loans and their uses, there are 2 main options for getting a personal loan if you have bad credit. And you got to familiarize yourself with those 2 options. So you have secured and unsecured, right? And but now within secured and unsecured, you have many other varieties. For example, you have secured personal loans, like the regular ones. You have unsecured personal loans, the regular ones. You have payday loans. You have cash advances. You have a bank agreements. You have home equity loans for poor credit. You have HELOCs for poor credit. You have student loans for bad credit. Okay, so this is kind of something that's important that you need to keep in mind. And please also make sure that you are able to spot bad credit loan scams. There are a lot of scammers out there trying to take your money, and they just put up a website that looks legit, but when you dig, you realize that they're just scammers. Okay, so always you want to, if you see a website that guarantees loan approval, okay, so this is that actually it says you will always be approved, you want to stay away from it. If you see a website that guarantees without approval, guarantees anything without approval, no registration in your state, poor advertising methods, no. Prepayment, no. Unsecured websites, no. Okay, no physical address, no. So those are things you really need to think about. Especially if you're trying to if you're trying to, let's say, you're trying to get a loan at a bank or alternative lender or credit union, you have to be very careful here. Okay, and one other thing I want to say here is that please remember that there are alternatives to getting bad credit loans. Okay, you just need to think about, you can use a home equity loan. If you are, let's say, if you are a homeowner, you can start, for example, a side hustle and basically use that hustle to get a loan. So there is a constellation of possibilities. Okay, it's all about your time availability, expertise, and most important, willingness. Thank you so much for your attention. I really appreciate it. In today's conversation, I will just share with you 5 soft pull loans, bad credit, low documentation. Number 1, we have here, Upgrade. Our score, 9.9 over 10. Number 2, we have Upstart, 9.6 over 10. Number 3, we have Avant, 9.4 over 10. Number 4, we have Landing Point, 9 over 10. Number 5, we have a Lending Club, 8.7 over 10. Lending Club is kind of cool when it comes to refinancing. This is really great. And in the bonus category, we have OneMain Financial, which is great for when it comes to an online lender with physical locations. Thank you. I'll see you next time. But until then, remember, stay marvelous.